All right, guys, here we go. Today we're going to take a quick look at the gold micro futures and the silver micro futures. And shameless plug, we do have a course in the description below that goes into, extreme detail on the fundamentals, introduction to micro futures, and the trading. Because just because you know the fundamentals about it and the backstories on these futures, you got to know how to trade them, how to get in, how to scale in, how to scale out. And just for example, just show you, we kind of sort of know what we're doing. As you can see, we got into gold here almost at the high when everybody was talking about, $2,000 gold. We knew by the charts, we knew by the technicals that that wasn't quite going to happen just yet. Okay, let me give you a little clue here. As we hit this extended line at the top, and then we begin to pull back out of this consolidation zone, and we go into all this in detail in the course. But anyway, we had a bearish engulfing takeout candle. That was our clue to start scaling in. We don't go all the way in, with one single trade. But anyway, as gold comes down, I'll just go ahead and tell you this. Uh, if you have two or more factors, in other words, two or more things on the chart, loosely described, you have an 83 to 87% chance of your thesis working out. So we're thinking if our thesis, we come down to the 50 simple day moving average and this very significant price level here at the green dash line. Okay, this is a measured move, high odds, high probability. Matter of fact, that's how we were able to milk that meta. If you look at that video from yesterday, I mean, we were working it all morning long on Meta, Facebook, if you want to check out that video. But anyway, as we come down, we have two factors here. So we're thinking, 1840 to 1837 should be the next pause zone or basically a support zone here for gold. And as you can see, we can leverage this thing pretty well for the, small amount of initial investment. You don't have to do 5 contracts. I have 5 contracts here. You don't have to do it. But let me show you now. Full disclosure, this is shot here is of my personal screen set up for Thinkorswim. Yours may be different, of course, and the way you have it set up. But what you do in the futures market here, you go over to the right and click on futures, and that gives you, your setup, how much initial investment you're going to have to make, risk capital. And on the first, let's just go ahead and go to gold real quick. And the standard contract to get in is 9 grand, okay? But we like using the micro futures, okay? And let me see, it's going to be right. Let's see, here we go, MGC, and 910 per contract, okay? So as you can see, there's a big difference. So you can, slowly scale in, slowly scale out. And then even oil, a lot of people don't think about it, but you could, one of the biggest markets out there, if oil starts going up, you can go long. And then, as you can see right here, the standard contract is 14,000. Okay, but we're not gonna play that game. We're gonna go to the micro, and here we go, MCL. 1400. Okay, still play the same game, still be in with the big boys. And then, of course, what everybody tuned in for is silver, and it's going to be down in the S's. And standard contract 10,000, a little over 10,000. And then what I was talking about on the title, 1,000 ounces with the smaller contract, 2,057 bucks. Okay, I mean that's incredible. And then for the Bitcoin, people out there, and I think this is a crazy deal. 46,000 for a standard contract. Okay, that's a standard one, but we're not going to do that. We're going to look at the micro Bitcoin futures, 924 to get in there. Okay, so as you can see, huge advantage, but more importantly, it's about the, what you can pull out of the market. Now, let me take this off here, let all this set up. And basically on this one, this is another great chart and how we knew to get in well up here. Now, as the bottom line is, everybody, not everybody, but a lot of people hold physical silver. And as you see these big red bars coming down, and then as we fold waterfall, maybe even further down, people are kind of, I don't know, you're just kind of anxious about, hey man, my physical silver is losing money. You may or may not be thinking like that, but with these futures, you can short it. Just hit, just go over here and hit sell market. As easy as that. Buy market, sell market. We cover all that in the course. But anyway, yeah, so you can be making, potentially, not guaranteed, you could be potentially making money as silver falls or gold falls to the downside. And then what do you do then? Then when we go to reverse, guess what? If you want to, you take that money and you roll it back into the physical silver. Okay, at least that's what we're looking at doing. So yeah, because it falls a lot quicker, harder, and faster than it moves up. So yeah, this is like, profit on accelerated time span, okay? Because it goes a lot quicker. But anyway, we had this sideways consolidation zone here. We popped up and out of it, but again, looking at the chart, here when you have those big wicks at the top of the chart here, and we explain all this again in more detail in the course, but anyway, that's kind of like these igniting candles here, the fuse burning down, and then the rocket goes either to the downside, or if you're down here and you have these big long fuses, it blows the price up to the upside. But you got to wait for confirmation, okay? And as you can see, we got in not at the top, but pretty close, okay? And from there, what we do, we come down, we look for the next potential support zone. We have this low pivot, high pivot here. We go into details about how those work on the chart. And then again, we have this significant price range here with the 200. So we could see possibly silver coming down into that low 21 area, 2114 to 21 bucks. Okay, no big deal. Just think how much green we're going to have up here should we hit that before we reverse potentially. Okay, so we have to wait and see how the market reacts. But one of the key factors I preach about all the time is this DXY, okay, U.S. dollar currency index. As you can see, it is blowing up, and we have price range, significant price ranges here, measured moves that we'll teach you to do to potentially catch the bottom and the top. And as you can see, we caught the bottom almost to the penny. Now you got to go to the weekly chart. I'll just I'll stop boring you to death here in a second, but this is how awesome these charts are if you know how to read them. Anyway, I had a high pivot over here from 2016, and we just pushed it down, brought it across, hooked up to the one in 2020, and then boom, look how that hit, and then the reaction to the upside. And we had that reaction, oversold, pullback. Basically, I think it's going to be just a dead cat bounce. We're going to come up a little higher and then roll over, and then metals and oil and everything will take off again, probably to the upside. So anyway, that was another, like I was talking about earlier in the video, you have to have two or more factors to increase your odds, your probability for success. So yeah, we had the odds of the factor of, the dollar reversing here, well, the DXY, and then, the silver and gold were kind of getting pretty much pretty high up into the chart as far as being a bit overbought. Okay, so we had two pretty good fundamental factors there, and then we brought in the technicals. Okay, the last one real quick, I want to show you copper here. You can trade copper. We just re-entered this thing, as you can see, not much on the board, but the main reason why I brought you over here, I want to show you. We have three different types of stop loss that if you follow it, pretty much guarantees you're not going to have to fund your account, and people know what I'm talking about. You know, you start losing money, they got to refund it anyway, and especially, and it will positively, absolutely keep you from getting wiped out. Okay, and that's it, absolutely in the course. And one of our tricks is you got to name it, you know, identify before you get into the trade. Okay, your heart doctor doesn't go in there and just start, well, I think this is the artery I need to clip on or do surgery on. I got a feeling this is probably what I need to do. I think he pretty much names it, identifies it before he starts, you know, working on it, so to speak. Bad analogy, but you get what I'm saying. And then we want two or more factors, reasons for taking that entry, either long or short. Okay, we just don't go, well, I think this looks good in this range, and I read something on, you know, Twitter, or I saw something on Reddit. You want to physically be able to, you know, name it, identify it, et cetera, et cetera. Like right here, it's just a bullish engulfing takeout candle in and around the 20. And what I mean by takeout, I just took everything out over here. And then we had follow through here, even more important, took up that high pivot over here and everything to the left of it. So higher odds, higher probability you're going to be able to get a little push up to the upside. But anyway, guys, thanks for watching. Check out our course below, and follow us on Twitter, and we will see you on the charts.